to what we want to talk today. Now, today, I'd like to talk about how the two wars and one rare development impact the economy. And when I talk about the economy, I'm talking about the global economy right over here. Now, when Russia first attacked Ukraine on the 24th, all right, the 24th of October to, 24th of February 2022. Now, many believe that the war would end quick. You know, if you have been following news at that time and said, it'll be either you hear that the Russians will be swift and fast, because the Russian military did say that, you know, Putin did say that this will be quick and they'll be fast, and then everything will end soon. Okay. Now, I think it's pretty obvious it did not, because it's 18 months now, and the Ukraine-Russia war is far from over. Okay, and recently Russia announced that North Korea delivered 1,000 containers of equipment and ammunition to Russia for the war, and this is what has been announced. What about things in ammunition that hasn't been announced? And don't forget also the countries, right? The US and some European countries have also been arming Ukrainians with equipments, and ammunitions as well. So this thing can just go on, for the time being. Now, what is worse is now we have to deal with another war that's coming up and potentially escalate. That is the Gaza-Israel war, right? And as soon as the world got news of the Gaza-Israel war, what we saw is the gold and oil, it gapped up, it moved upwards, and gold especially has been like on a rocket. So whether the upward movement is temporary would depend on a factor which I personally think is crucial. Very, very crucial. Now, that keyword over here is whether the war is contained or does it bring in other parties, be it the Ukraine-Russia war, be it the Gaza-Israel war. Okay, so on the onset, the beginning of the war, of course, you will see the market, they shake, but then they look at it and think, is this going to involve the rest? Because only when you have more and more people coming in, then there's a potential of this growing into something, this war growing into something bigger, not just contained. So the keyword for every war that's happening, every conflict that's happening right now, is that, is it contained? Okay. Now, if you look at the Ukraine-Russia war, once the Ukraine-Russian conflict was contained, the market actually come down. When it first started, if you look at the US stock market, for example, it started coming down first. It came down, and when people realized that, hey, the rest are not joining in, because they were like, would US send people? Would the rest of the European countries send people in, their army in to assist Ukraine in the war? And then from the Russian side, right? Of course, it's a long shot, but I believe they were, some people would be thinking whether Belarus is going to come in, join Russia in the war, and would the rest, like China, come in? But of course, China is a long shot. They don't want to be involved in it, right? So, but the moment we see that it's contained and countries are just assisting only by giving ammunitions and other war equipments minus the foreign army, things calm down, right? Because the thing is, it's contained. It's contained. The keyword here is contained, right? So the same would be applied to the Gaza-Israel war. So far, what we're seeing is that the market, when I say the market, the US market here, is trading with expectation of war being contained. Now, if the war is not contained, the world economy will be facing more inflationary pressures, and a weaker economy. Now, so I have been over the weekend, I've been looking into the developments, even up to this morning, to see, because there's been talks that Iran is behind this attack. And so if Israel retaliates against Iran and Iran engage, things will get worse. And not only that, we have Lebanon and Syria joining in. If they join in, the war would then get significant. Okay, we already have Iranian personnel already in Lebanon and Syria to discuss. And if you look at the reports, right, now you think of this. I mean, the pictures of the war, they they wrench your heart. You see the people, innocent people, that died in the war and how they died. And recently you had the what do you call, Israel giving a warning for the hospitals in Gaza. If I'm not wrong, there are like 22 hospitals in Gaza, to evacuate these hospitals because it's too dangerous. Now think of this, like this morning I was looking at the video of a children's hospital, right? Some of these children are on ventilators, and when you talk about ventilators, and you take them off these machines, they will die. It's like a death sentence, right? So imagine this, if Israel pushes on with this ground attack and they want everybody to evacuate these hospitals. UN has already said it's just not it's inhuman to do that. But imagine if that happens, right? Because they cannot guarantee the safety. This kind of emotions can pour out, and you can get more sympathizers, to come in. Now, we don't know Lebanon and Syria will or not, but Iran is definitely there telling them, let's come in, let's do this, let's support. And that is one thing that we really need to look into in detail. Okay, so that's why I said this whole week is very, very crucial. In fact, the next 2 weeks, because Israel is planning a ground attack. After pounding Gaza with missiles, they started the air attack already, and now they're moving to ground. So there is a chance for Iran, Lebanon, and Syria to join Hamas if this happens. Iran has already given a warning already. If you're going with the ground, we will come in also as well. Okay, that is a warning over there. Now, we have talked about the Gaza-Israel war, right? And one need to also ask, could this Ukraine-Russia war move, heat up further? It's one thing. One war, the world is already seeing a second war going in, and this one probably escalating. And can this escalate as well? This is a real big question mark. And like what the CEO of JP Morgan said, Jamie Dimon, we are living in very dangerous times. And yeah, let's hope that, how would I say, that's a resolution to it and it's fast. Okay. Now, this is the war part. The next thing I want to discuss right now is that there's one development that's also happening at the same time. Okay, so as the Ukraine-Russian war rages and the Gaza-Israel war escalating, we are seeing something which is rare happening to US and the global economy. And that is the simultaneous significant move up in bond yields, US dollar, and oil prices. Now, if you look at the US dollar over here, right now, the rise in the US dollar had not only about the interest rates, the US interest rates that's going up, right? It also has to do with the US dollar, as the what they call safe haven currency. Now, they are three safe haven currencies, the US dollar, the Swiss dollar, and the Japanese yen. Now, right now, the Japanese yen is not acting as a safe haven at all. Not at all. So that only leaves the US and Swiss. So right now, but today I want to discuss about this, the simultaneous move up in all three. And what does that entail? What does that mean? Right? So this scenario here presents a complex and multifaceted implications for both the US and global economies. It's quite rare for all three to move up significantly at the same time due to their interconnected relationship and different driving factors. Yeah. So here's a breakdown on what such a scenario might entail. Now we are seeing this. These are the scenarios that might entail. Number one is inflationary pressures. This might come back again to haunt. And that's one of the reasons why you see that a lot of the the central banks, they are reluctant and they have been talking about increasing rates further, at least one more time, and also maintain interest rates at elevated levels for the foreseeable time. Because right now we have high oil prices, and this can fuel inflation by increasing transportation, production costs, while high interest rates reflect or induce inflationary expectations, right? This is ongoing. And if you maintain this, it's the same thing. Everything is the same. Now you add the war, there's a need for this, then it's not that easy. Because during war times, there is demand for oil. Now, not only that, there will be also global trade disruptions. The simultaneous rise of the US dollar might mitigate some domestic inflationary pressures, because now the US dollars is expensive, so it's cheaper to import things. But it could also exacerbate trade deficits and impact manufacturing and export sectors negatively. Okay? Because if you pay in US dollars, people were like, oh, I won't buy that much, it's too expensive. Now, looking at the corporate sector, higher bond yields and oil prices increases operational and borrowing costs. We have discussed about this already, right, in the earlier reports. And this potentially squeeze profit margins, especially if the companies are heavily reliant on borrowing and heavily involved in international trade. As international trades here involve foreign exchange, if you're borrowing heavily, that is the interest rates. So it's a big of a headache for them also as well. Now, for the consumers, they face higher prices due to elevated oil prices. This is being passed down. Okay, this you can see everywhere. It's happening everywhere, even where we are right now. And the cost of borrowing, like mortgages, loan costs, will rise with higher bond yields. It's coming and it's already here, whether like it or not. Now, if you talk about the emerging markets, they are often reliant on exporting commodities to the US and other countries as well, right? So they might benefit from high commodity prices, but then negatively impacted by the strengthening of the US dollars, as it increases the burden of dollar-denominated debts. If they have that, then they're like, oh, okay, now I have to pay much more because what I owe, the debt in the past, is cost me much more. So how am I going to deal with that now? So we only need to look back in the past. Now, though it's not perfectly synchronous with volatile oil prices and peaks in bond yields and the US dollar, the 1980s does provide some context for analysis. And in the 1980s, we saw a severe recession that affected much of the world between 1980 to 1983. It lasted almost 3 years. Right over here. So that's why you are seeing a lot of these central banks trying to mitigate this and slowly, deal with it in a manner where hopefully they can achieve a soft landing. There's one group who still believe there is a possibility of soft landing. There's one more group who thinks that no way, it's going down the dumps, right? And if you add the war here, and if it escalates, it's not contained, it's going to make things even tougher. Okay, so let's look at what central banks need to do. So when you understand that, then you will also understand the developments that need to come from the central banks. And only if we see these developments, then yes, that's the potential. Right now, it's not that easy because we have to deal with another global catastrophe that's potentially coming. Okay, now for soft landing here is achievable with strategic approaches to the following. Number one, monetary policy adjustments via interest rate management and asset purchases. When we talk about interest rate management over here, we are discussing about the central banks, approaching these interest rates in a cautious way. Okay, they manage it well so that they don't stop growth, they don't stifle growth, because and they can use things like higher bond yields, applying natural brakes to the economy. Last week we have discussed, okay, remember one of the FOMC members, they said that high interest rates alone can help it already. So depending on the economic context, what to do next over there, then at a later stage, not now, but at a later stage, when we talk about asset purchases, we are talking about quantitative easing, okay, to ensure financial market stability right over here. Okay, this is one way they have to deal with it. So the first part is interest rate management. So that's the reason why the market do not think that this should continue. The Fed should increase the rates. We have looked into the part that 12 voters there, 12 out of 19 saying that we should increase. If that changes, that will help. Okay. The second thing is fiscal policies adjustments via targeted stimulus and support of affected areas over here. Now, when we talk about fiscal policies, we're talking about targeted spending on the right areas, tax cuts, tax cuts, right? You aim at sectors most impacted by these rising costs. And you can also support, these vulnerable populations. That's one way. Now, when we talk about supporting affected sectors over here, these are the sectors that is heavily impacted by rising oil prices and higher interest rate costs, like areas like transportation. They are affected by rising oil prices. Okay, manufacturing is affected very much by interest rates, small businesses and so on. Okay, so other than that, the US really needs to coordinate internationally, globally, to stabilize the currencies. And they also need to conduct trade negotiations. They cannot just leave it. It's not like America is America, saving yourself only. It's not about that, because everybody is looking into the US dollars as a reserve currency. So you just can't think about you yourself. It's how to stabilize this, because everybody is using the currency. Okay, so that discussions needs to happen, because at the end of the day, US denominated debts, when a lot of these countries, they may already have US dollars denominated debts, and if the US dollars keep on getting more and more and more expensive, it will be tough for these countries to pay back. Okay, and when it comes to trade negotiations, of course the US has to work towards trade agreements, And not only the US, you can see the other regions that's affected, like the European region, they have to do this too, to facilitate smoother cross-border transactions, and as well as mitigating impact arising from, stronger US dollars, right? So I think conducting domestic policy adjustments is important as well, to, like, for example, to mitigate higher oil prices, because oil price, like it or not, is high oil price, they affect. And job programs, we know that, they need to, that part, I think the US is okay, the rest of the world so far is okay. But with the developments, if these interest rates continue there, then they may need to do something with these jobs, okay? And conduct financial market stabilizations like regulatory oversight and liquidity provisions over here. Okay, so and this, when you talk about regulations, is ensuring robust regulatory oversight to prevent systematic risk in the financial markets. We have seen the banks, they were affected by that already, right? So it is very, very important, and liquidity provision, so that the conditions to do business remains conducive to stabilize the financial market, so that it doesn't spill into other areas. And lastly is addressing inflation via supply chain interventions and wage controls. I think this has already been ongoing here, and the wage policies is to so most important for the wages here, I think, is more this part, because we have been looking into the wages for some time already, and coordinations with the business important to ensure that wage growth is aligned with productivity and does not excessively stoke inflationary pressures. This is the most important thing when we talk about wages. Now, this is what a lot of these central banks are doing right now. Okay, so if they can manage it well, yes, you can have a soft landing. But then again, we have to see the developments of the war, how this war is developing. Would Putin escalate, make this even, bring this to the next level? Would the Gaza-Israel, would Iran join in? Would Libya join in? Not Libya, Syria join in, right? So that is one. And would the rest, what about the rest of the Middle East? Yes, it's different from the previous war, because Israel has signed some peace treaty with some Middle Eastern countries. But then again, don't forget, global destruction can happen, because Qatar is one. If nobody is stepping inside to stop this war, Qatar is not going to supply natural gas to anyone. Imagine this. They can do that. And when that happens, it is a big issue. Somebody has to step in. China may step in and say, stop this. Russia, things can happen. So what we can do, we have to pray things don't escalate, and good sense prevail, and peace be upon everybody. Okay, so that's the fundamental report for today.